We're going to take a look at the stock market in a second. First thing that I want to do is I want to remind you, some of you are watching this right now, just looking at the clip of the S&P 500. I want you to go back and look at MarketWeek, and you'll be able to see the special that we're running as I give you real detail about this for level 3 slimulator ranking system, trade ideas. I show you all of the numbers on how well they've done if you go back and look at that. Stock index report live stream, stock index report daily, the weekly stock index report, amazing analysis for longer term holders, weekly ETF review, the slimulator momentum tracker with just a huge amount of symbols that you can look at with all of our algorithms in there for momentum in 3 different time frames. Really the sum of the evidence in there that gives you our directional bias in each of those stocks, and my whole library, 500 plus videos, 9 categories, all of that just for $49.50. And there are 3-month specials. Right, Matt at askSlim.com, M-A-T-T at askSlim.com. Just brought that back right in here because a lot of you people jumped and you want to see the S&P 500 and the stock market, and I want to make sure that you see this amazing offer that we have right now. So now we're going to look at the stock market, but I'm going to show you something a little bit different first. We're going to go to SPY. This is something I share with my members. I might have shared it on here back some weeks ago, looking at cycle analysis. Remember again, the cycle analysis is looking at the rhythm in the market. It's the heartbeat. Ba-boom, ba-boom, ba-boom. Each of these cycles that you look at in here are different lengths. They all take different forms, but the rhythm and the oscillation you can see right over here. The average cycle is 22 weeks in length, going back for years and years. And you can see, well, this one was only 18, this one was 18, this one was 24. This one made a high on 24 and now is coming down in here and maybe 25 or 26. So this one's going to be pretty long. We looked for declines, for the cycle to come down and decline much earlier than this. But the point I made is that the longer it holds up, the sharper and steeper it's going to be. We expected that there would be a decline that occurred like in each of these, and you can see the percentages, 23%, 6.7%, 6%. This was, of course, 35%. If this one comes down in the spiders down to this level, about 325, it will be a 9.2% decline. Peak to valley right now, it's about 6.6% in here, which is, pretty normal. And I talked about the amount of decline we can get in the S&P 500 during this period, and sure enough, here it is. It shows up, but it really was challenging when you have this type of extended move. And this certainly, I've had a lot of people say to me, well, cycles are no good. I mean, you have the Fed coming in and they've wiped out all the cyclic action, but not really. This looks pretty much exactly like they look when you go back for all of these years over here. I can just go right over here and show you looking back here into 2014, 2015. Look at the rhythms in here. They are absolutely perfect. You can see these upward configured cycles. They have these corrections. And there you see 12%, only 4.2%. Now I want you to look right over here because this is a pretty significant period. Rallied 19 weeks, came down in here, 12% decline. And then you had this kind of a go nowhere cycle for the next 4 months, 5 months. So there's a potential that we have something like this right now. And of course, there is a potential that you move up and take out the highs. Now, making the low in here in the next 1 or 2 weeks, and this is in alignment with what I'd showed earlier in the show about the tech stocks. Again, go back to watch the beginning of the show if you're only watching this clip. So the tech stocks show they're going to come down a little bit more and then get a rally. The question is, with the election coming and all the craziness that we're having here in our society, how much of a rally can you get in here, especially with Biden talking about these higher taxes? So we might just chop up into here and then begin to come down again, and then you get into this risky period again in November, December, early part of January, right over here. So I put this yellow oval in here. Well, that's where it belongs. As I have proven to you, here and here and here and here and here, going all the way back for the last 6 years, at least 7 years, and in this perfect alignment of 22-week averages. You want to learn more about this, go to askSlim.com. Go to the workshops tab on the top, and I do a lot in there of explanation about cycle analysis. And you can see this decline really late, extended to 24 weeks for the first time in all of these years, and now has this sharp move down, which really doesn't have much more time to go. So I really wanted to start my short-term view by giving you this view that's a little bit different in the longer-term, intermediate-term patterns. And again, you could see the giant megaphone that's forming in there. And there is a potential when you get to the top of the megaphone that a bear market is coming. So that's just a little tip-off of what we might be looking at in the future. And I'll be doing some big picture analysis on the stock market in coming weeks for our members. So that is a look at SPY. I'm going to switch over to SPX and move over into the daily chart. We've done a little bit of a change in here in our illustration. In Future Speak, I did some detail in explaining on what this looks like. Instead of creating just a single line that essentially we change based on the formation of the cycle as it occurs, we're going to do it a little bit differently now, and that is give you the upside potential if it's bullish, the more negative potential over here, which wouldn't be very negative in a bullish pattern, and what is the average right over there. And you'll see that this lays out pretty well. This wave structure was stable if under the assumption it was put in right at that point at the beginning of the cycle. This is multiple time frame bias that we look at, which is positive, and the cycle structure, which is positive. This big decline comes because of what I just showed you in SPY, because it's the very, very final stages. And you could see the projection in here after the next 3 to 6 days beginning to move to the upside again. That's what the short-term pattern looks like, but there is risk now. There is risk now over these next several days as the market has had these two very large down days in there, peak to valley, getting close to 7%, and then we're in this declining phase right over here. What are the numbers that we're looking at? Well, it broke through these supports that you could see that we had right over there. This support it actually stopped on was about 33.50. Best case is testing 33.50. I think last week we gave a number similar to that as the downward projection, but we actually did kind of blow the level of the highs right in here, which hit the very top of that fib extension target zone right up over there. We would have never guessed that it would have gotten that high. So for the next 2 weeks, we're going to look for a decline, which carries into the early to mid next week, potentially later than that, but I'm guessing by mid next week, and then beginning to make some upside rebounding ground in there is what we're looking at. This is the support from the weekly cycle around 32.75. There is a possibility of hitting that, and this will always be showing the cycle support right over there at 33.26. So that's kind of your supports that come in right over there, 32.75, 33.26, and where it tagged right over here about 33.50. We think 33.50 will go again on the downside early in the week and then begin to move up. We're going to say that some of the evidence is a correction that we've been talking about into September is here. Again, I'm not taking any real credit for that intermediate or longer term perspective because it went up for 2 to 3 months longer than I expected it to. We expect it to get down into this area of this 6.5–7% decline to the 9% decline right over here, and then be done for and begin to try to get some rebound. Investors right now are just bailing, absolutely bailing on this crazy valuations that we saw. Momentum is still up. You can see that. Even with this decline, the momentum is up in all time frames. It probably will go to neutral, and here is my guess, and then revive itself and then turn up again. If it goes negative, I'm going to be lowering my upside objectives in here before this cycle is done for. So we're going to look for this bottom coming around by midweek to late week next week, and then begin to get into a rebounding period. Again, supports on the downside or targets that we're looking at, the 33.50 area right over here, this cycle support here around 33.26, and this at around 32.75. I think that the 33.26 to 32.75 support zone right there is the strongest likelihood into the middle of next week.